Welcome back to another episode of Profitless on Purpose, the nonprofit accounting podcast. I'm one of your hosts, AJ Wheeler, and with me as always is Mark Pallardy. Got a great show for you this week. We'll be doing a couple articles. Nonprofits are questioning their use of Facebook. Is Facebook still a good platform for donating with all this privacy and data sharing kind of concerns out there? Should your organization still be using Facebook and their very enticing zero-fee donation platform? Well, we'll talk about all that. We'll talk about the pros and cons and maybe some of our opinions on Facebook and how you can leverage them for your nonprofit. And then how do you analyze a charity that you want to give to? What your nonprofit should be looking for, or be looking at when people are trying to suss out whether or not they should donate to you. And some suggestions from us if you're looking to donate to a charity, what you should be looking for outside of just financial ratios or some rating on a charity website. And then Web3 and the trap for good. This is all things, new. So NFTs, cryptocurrencies, blockchain technologies, how it's going to affect your nonprofit, whether or not we should be fearful of Web 3.0. Is it good for your nonprofit to put out a non-fungible token, NFT, or a cryptocurrency? Some have tried. They've been a little unsuccessful. We'll talk about all of it, what the pitfalls are, and how you can be ready for this new turn in what is coined Web 3.0. And then our question for the week is actually financial oversight at a board meeting. What does your board need from the financial reporting? Who should report it? What are best practices around it, and how that affects your organization, and what the board is there to do with that financial information? We'll talk about all that, give our opinions, give our best practices. But Mark, you got our first article. Take it away.
Yeah, shockingly, I have the first article, AJ. That's something new. Our first article today is called Nonprofits Are Questioning Their Use of Facebook. This is by Emily Brenner and Karen Hoekstra, and it's part of that 11 Trends of Philanthropy in 2022 that we love this series so much. We're giving it some more airtime. This article, basically, they talk about the size of Facebook, and obviously it's the giant player in social media, but many people are well aware of the harm that its products cause, and their questionable data collection practices, and yet they're still being used by a lot of businesses and a lot of philanthropic organizations. But some of these organizations are starting to ask themselves the question, should we actually be using Facebook? Is this something that's good for our organization? So, some statistics, Facebook has 2.9 billion monthly active users, and it does provide real value to nonprofits. It creates awareness building, can create community engagement. And then of course there's the Facebook fundraising platform where they don't charge fees to organizations, to nonprofits to help with their fundraising. But when the old saying on the internet, if something's free, the price is actually you, right? Your data is being sold. You're the commodity here. So that's a trade-off. Nothing in life on social media is free, right? So they have raised $5 billion in nonprofits over, since they started in 2015. So they are a significant source of giving, especially individual donations. But there's a legitimate concern, right, that nonprofits really are just there as a way to mine user data. Nonprofits who are especially looking to save fees on fundraising platforms often go here because they can have a lot of reach and little fees, but yet their donors' data and privacy can be compromised. And frankly, in working with one of the nonprofits I work with, I would say we have at least about 20% of people who say, yeah, I don't use Facebook anymore. Is there another way I can donate to this fundraiser? And clearly, I think having an alternative method for those people who are completely turned off by Facebook at this point is a wise choice. But I'm editorializing. Anyway, so what also seems to be a problem with some nonprofits from the nonprofit side is that Facebook can falsely censor their messages as being political statements, and they are the arbiters of what is actually nonprofit information versus what is political. their platforms are often seen as harmful to children, undermining democracy, exacerbating discrimination, and all these issues. And so as a nonprofit, are you actually complicit by using Facebook in promoting those things, right? I guess it depends on what your nonprofit stands for. But if you are a nonprofit that is out there to help children, but yet you're using Facebook, which is, potentially very harmful to children, are you part of the problem? So this movement has started a few years ago to kind of stop using Facebook and to move to other platforms. So far, it hasn't really made much headway, but there definitely are people looking at what some alternate sources can be, and some more responsible players. And as Facebook converted over into the new brand known as Meta, and we're going to actually have a pretty meaty article later on Web3, and Facebook will be a player in this. But as Facebook moved over to Meta, people thought, well, maybe things will change. Maybe Mark Zuckerberg won't be as much in charge. But basically, they clarified in their statement of corporate structures and said none of their data collection practices would be changed in that changeover. So, it's they know it's working. They know it's making money for themselves and their shareholders. So it's business as usual. So it was an interesting article. I think it's a trend for sure, because I think people are moving away from this. I just don't know what the alternatives are. AJ, what are some of your thoughts on this?
Yeah, I think, so Facebook, I think there's two questions here, right? Like whether being on Facebook with your nonprofit is like promoting some evil social network that steals everybody's data and is intrusive and causes harm. That's one question, I think. And then the other question is using it as a fundraising platform. So, I think as a fundraising platform, let's be honest, I think you'd be hard pressed to find somebody that doesn't have a Facebook account, and maybe like skewing younger generations. If you're under the age of 20, maybe you don't, or you're not an avid user. But the nans and grandpies out there, and the, like your parents, or, people of my age, I guess, now that I'm getting older, most of them probably have a Facebook page, and it's probably a pretty good way to engage, depending on, and I would take a look at your donor base, and understand the demographical makeup of your donor base to understand, is Facebook, if you haven't implemented a Facebook page, I think, every nonprofit, unless, like Mark said, somehow it goes against, unless you're a nonprofit around, privacy rights or something like that, maybe, it's not aligned with your mission. But I would say, it's always good to have your nonprofit be in the spotlight on these different social media platforms, because more and more, in the 2020s, you're going to be, this is how people communicate. This is like having a web page in the early 2000s. I mean, you kind of have to do it, I guess if you want to be upfront and you really want to direct people to what your nonprofit does. I think actually, from the privacy standpoint, switching back to, data privacy and such, I did listen to a recent podcast. I think, as some things, maybe this data collection has been blown a bit out of proportion. I know that's probably like not in vogue to say, but there's a lot of people that don't understand the back workings of how data collection works, and the amount of data it would take. A lot of people think that your phone or Alexa or all that stuff is just open listening to you and recording everything you say, but the actual really what happens in the background that would cause millions of terabytes of information to have to be stored or listened to by an AI program, that it's not really feasible right now, given the constraints of data collection, the way it sits. At least that's the impression I got from this podcast I was listening to. So I think maybe, of course, I think everybody needs to have the wherewithal to understand what a social media platform is taking from them, but also understand that, you are selling I think more and more we're realizing that, giving up a portion of your data or giving up your digital footprint to a company pays for a lot of things. A lot of this stuff is free for a reason. It's because the real commodity is your data and your spending habits. And we live in a capitalistic society that, that is why your data is worth something, because at some point somebody wants to try and sell you something. So, understanding the trade-off and making either peace with it or shying away from it, or using applications that don't collect your data or aren't intertwined with each other, is one way to circumvent this as of right now. But as far as Facebook being a fundraising platform, I mean, and to be clear, there's other donation platforms or donation portals that you can use. Facebook isn't the only game in town. There's Stripe, there's all kinds of other things. PayPal, I think, even allows, you can embed these donate things into your web page. And if somebody doesn't use Facebook, or if you have a Facebook fundraiser that somebody says they want to donate somewhere else to, you should be able to pretty easily have an alternative for those folks. And so I don't think, this isn't the only game in town, essentially. And nonprofits, if you just do a Google search, nonprofits have a lot of available resources from, and we've talked about it on this podcast before, about, from fundraising platforms to Google grants and AdSense that you can advertise your nonprofit on, in Google, and target ads towards people that maybe donors are interested in volunteering. That stuff is available for all nonprofits. And I mean, Google AdSense or those Google ad grants are very easy to come across. You fill out a form and you're immediately granted with those, and you use them up during a year. So I think there's alternatives out there, but I think it's always good to talk about these things and understand what's emerging on the other side of Meta. Are you gonna have your nonprofit in one of these Meta universe worlds to advertise? That would be maybe a little strange at this point, but who knows, in 10 years, that may be the norm. And it may be a way to drive, younger skewed participants and volunteers and donors to your organization. So I don't know if it's all gloom and doom, like this Stop Facebook Now kind of campaign is. But I also don't think it's all, rainbows and sunshine with data collection. So I think towing the line in the middle there and being, aware that this is a good platform and it's fee free, but also knowing that, maybe not your entire donor base has a Facebook page or wants to interact with Facebook, and having an alternative plan. I mean, we've talked about, hedging your bets on this podcast many a times. And I think this is another case where, you can diversify how you're bringing in donations, what the platform is that accepts those donations, and ultimately making your donor feel comfortable giving money on the platform that you're providing them. So I would suggest anybody to look at you should be looking at your fundraising platform, your fundraising kind of ethos every year at least, I think, and understand it, even if it's looking over it and saying, oh, we're still in a good place. I think that's vital. So that was really my takeaway from the article. But Mark, I'm sure you have more to say about it.
Yeah, and I mean, I think you covered a lot of it, AJ. But I think it's just a matter of, nonprofit entity beware, right? This feels like Facebook, is doing this altruistic thing to get nonprofits, give them fee-free fundraising capabilities. And sure, it works well for nonprofits, but understand that there's a mechanic behind this, right? So let's say I am somebody, and I can speak from personal experience because this has happened to me. I'm somebody who donates to a fundraiser on Facebook. Great. So I now have contributed some money, but now I'm going to start getting advertised to from similar like nonprofits that want my money as well, or campaigns that are running, or help them reach their goal, et cetera, et cetera. And I might have just donated to this first nonprofit because a friend was asking me to contribute for their birthday or something. I might have no interest particularly in that cause, but I'm all of a sudden getting different nonprofit fundraiser requests. And the reason for that is that nonprofits are throwing in some ad buys based on the metrics they're seeing, and Facebook is monetizing that data they're collecting on people who are giving, quote unquote, for free, and giving that, selling that to nonprofits. So the only piece of this puzzle is that Facebook doesn't charge you a fee to collect donations on your behalf. They're still charging you ad revenue and other stuff on the other side. This isn't an altruistic thing, but yet they do still come out. It helps their brand because, Facebook has not been known to be so well liked in the recent past. So just be aware of what you're getting into. And like AJ said, have alternatives for people who are getting tired of this. And hopefully we see other robust social platforms that can do similar thing. But if you want the widest reach, this kind of is the only game in town right now. So anyway, that's my take on it. AJ, I think you got our next article for us.
Yeah. So you're not, just to be clear, Mark, you're not going to be running a Twitter ad campaign or a Twitter fundraising campaign. I do think probably Facebook is the only
or TikTok, right? Because I don't know that grandma's going to be on TikTok jumping through the hoops and looking to over here and over there to donate.
Oh, man. Well, switching gears a little bit, I think this kind of dovetails in. If you're wanting to give to a charity, and often donors, are not intimately involved, especially if you're like one of those people like, oh my gosh, December's coming up and I want to take advantage of this new $300 donation tax benefit. Who can I donate to? And you want to make sure your money's going the right direction. We have an article here from Forbes. Now, this is back from 2017. And the reason why we put it in is we just recently in-house here had training on like analyzing the health and kind of providing modeling scenarios for nonprofits from a financial standpoint. And this was one of the article that the person that was doing the CPE, Tammy, used to be on this show for a while, but she referenced this article as kind of a starting point for some of her ratios in this, but it's called How to Analyze a Charity Before Giving. And even though it was written back in 2017, a lot of this still kind of holds true. I'll go through the article and then maybe give a little commentary. Now, this article is based around, and he makes it very clear that they're analyzing donation-based organizations or organizations that have a large fundraising arm to them. So understand that this isn't really representative. And if you're trying to, and we can talk more about this in our commentary, but if you're looking to analyze, and find a good nonprofit that you believe in, and you try to apply these same metrics, and they only have like $10,000 worth of fundraising and all their income otherwise comes from grants and program fees, this won't be a good way to analyze it. But essentially, if you are a charity, a donation-based one, often we've seen like Charity Navigator, we've talked about in the past, GuideStar, Charity Watchdog. There's all these different organizations that pull public provided information and run ratios and give nonprofits a rating. And if you want to know how that works under the hood, this article kind of pulls back the curtain a little bit and shows you how those aggregators, I guess, or scores of nonprofits do it. And essentially, what they do is they're taking a look at like how efficient a nonprofit is. And when we talk about efficiency in a nonprofit, what we're talking about is for every dollar you make, how much of that money is going to, say, administrative overhead or fundraising cost, or how much does the program administratively take, meaning that this is the cost of running the business of the nonprofit. And so what they're talking about here, and very specifically, is charitable commitment. This is how much of a charity's total expense went directly to the charitable purpose, also known as program support or program expense. So what this is it's telling you how much of their expenses went to pay for administrative costs versus how much it went. And there's some rules of thumb here. If there's a charity that's below 60%, they have a failing view. Now I would say that's a pretty low score. If you have 40% of costs going to your administrative, that is quite a blow for the rest of your programs. That means 60 cents of every dollar is going to programs and 40% is going to support that in an administrative view. But most charities probably range from like 80% program expenditures to say 90% would be like a gold standard. If anybody works with governmental entities, their administrative costs is supposed to be 10%. It's usually locked in at 10% unless you beg, borrow, and steal to get more than that. But that's kind of their rule of thumb behind it. The other ratio that they use here in understanding it is fundraising efficiency. So this is the percentage of private donations remaining after deducting the cost of getting them. We've talked about on this program before, galas and fundraising events and how costly they can be to run. And one of the things that this does is saying it takes their fundraising column in their management or in their financial statements from this, and it looks at all those costs, and then it looks at donations and other events and tries to suss out what that ratio is of cost versus what it brought in. The one thing that it doesn't really represent when you're trying to look at this stuff is externalities, meaning how much opportunity cost was lost because somebody was planning galas and events or fundraising things versus if they could have been doing something else with their time. So it's not an exact science here. You can't look at these ratios and say, but what you can tell is if people are being deficient or overspending on how they're acquiring funds. And it doesn't do the charity or the recipients of that money any good if, 50% of fundraising, donations is eaten up by the cost that it takes to acquire those funds. So it's really understanding how that works. And then the last one I thought was really interesting, and the author thinks so too, is donor dependency. So it's essentially calculating how badly a nonprofit needed contributions to break even. Now, the goal of any nonprofit shouldn't be to break even, but that's the way that they formulate this ratio. And what it means is if this ratio is 100%, revenues were the same as expenses. A ratio higher than 100% means that the charity had more expenses than revenues. And of course, a negative ratio means that the charity had an annual surplus greater than all the private donations. And so this would be maybe the case if for a hospital or a museum. But usually, and in the list that they looked at, it was, somewhere around 90%, and what that means is, and what this ratio is trying to get at is how well a nonprofit is using the revenues that they have coming in. And this is donation. You could look at this overall for the organization and not just do it on donor dependency. But often donors are left when you're fundraising or budgeting, they're left as the plug number. If you're short $35,000, I don't know, there's often this cavalier attitude that it'll be making up by a donation that we'll go out and get. A development department or an ED will say that they'll find that money somehow to be able to operate this, what seemingly would be a negative budget without this huge windfall. The problem with that is they probably did the same plug for the last 10 years and have been operating in a deficit and they're low on funds or kicking the can down the road here. So it's really incumbent upon, operating a nonprofit and to be able to be profitable, to be able to plan, budget, and forecast, to be able to have a surplus so that, when times are lean or if you want to install a new program, that the money's available. So I thought it was a good article, and I thought it was something maybe, like to put on your radar and think about if you're a donor or if you're a nonprofit and want to understand your nonprofit better. I think this is a really good place to start, especially if you're a donation-based organization. What it doesn't do a good job of is kind of telling you how to assess an organization that, and something that we actually beat the drum around here a lot, with diversified revenue sources of grants and, donations and maybe, interest and, investment earnings and all that kind of stuff. It doesn't, and that's a more complicated case, but it doesn't broach the subject very well. And if you're looking to donate to a nonprofit, you find one that is, funded in that way, it may be difficult just reading this article to understand that. So, hopefully we can maybe expand on this a little bit more in other episodes and provide you more tools in your tool belt to be able to assess your own nonprofit or to assess a nonprofit that you want to donate to. But Mark, I've been rambling on here quite a bit. Why don't you give us your impressions on the article and maybe some of your insight that, from your previous work at the museum and such?
Yeah, I think, these are interesting metrics, and I think they're well explained, and AJ, you did a good job of recapping these. My concern with the article, right, is that if I'm, this is aimed at people who have the time and the bandwidth to run these kind of metrics. And surprise, surprise, Forbes can just give you their list of top 100, charitable charitable organizations that already meet these metrics for them. So a lot of this is funneling you once they explain this to you, and you as individual readers say, I don't have time to figure out these metrics. I'll just use Forbes's list because they think about these things. I think that's a goal of the article. I think it's important that they explain it, but I think we should also keep in mind what they're trying to do here. Because if I'm somebody who is just a lay person, am I going to go to their website, pull down their 990, pull down their other financials to kind of run these metrics myself and then say, oh, look, their fundraising efficiency is at X%, right? So, I can look at a functional expense report, but I'm an accountant, right? I'm a CPA. I can figure out these numbers. Most average donations and donors aren't doing this. I think the other piece that is missing out of this, as I was reading it, is where's the heart, right? Where is the aspect of I want to donate to this because I believe in the mission, not because the metrics look good, but because I believe in what they're doing. Sure, you can believe in a specific, like if I'm interested in homeless causes, I can compare multiple charities that are collecting money for those reasons and compare these metrics against each other. But I think if I'm just saying, well, I just want to donate to the charity that has the highest metric, then I'm just doing that for a tax write-off or whatever. I'm not really doing it, for the goodness of what giving comes to the table with. So I think a little bit of that is missing in this article. But for metrics purposes, if you are an organization and you are looking at different metrics and you want to have a charitable contribution, that's great. There are other anomalies that are going to happen from organizations. Let's say I have a bequest, right? Somebody dies and they leave me $2 million in their will. Yeah, let's let that happen. I'm totally open to that. Anyway, if they leave money to an organization, in the following years, the organization might be spending more than is coming in any specific year, because that revenue is only going to show up in 1 year, and subsequent years, right? If I'm an organization that runs, say, on $200,000 a year, and I get a $2 million bequest, well, for the following 10 years, my expenses are probably going to outpace my revenue because I'm going to be spending more, and that money is going to sit on the balance sheet as it whittles down. So, there are different ways to look at this, and these ratios. I guess what I'm saying is try to get the backstory for these ratios as well, because sometimes there's more to the picture than what a percentage number can tell you.
Well, and I think you make a good point. I think these ratios and these charity ratings and everything that we see kind of out of that space is really for people that are not involved in the nonprofit area, right? They just want to give their money and kind of be left alone, I think. But I think I would encourage anybody that's donating to a nonprofit or wanting to do some good to get involved a little bit more and understand an organization a little bit more. We talk so much on this podcast about relationships and how that's kind of the basis for everything that should happen in a nonprofit or even in our business. And to have some kind of, back and forth with a nonprofit and really understand the inner workings and how they're delivering their stuff. And this, I'm not talking about even volunteering, but even, providing that you understand how your money's being spent, I think can be done much easier than just running ratios or trying to pull down a 990, than maybe just engaging a little bit with the organization that you're wanting to donate to, or having a good understanding of how that money works. Often, Salvation Army and Goodwill didn't get to where they're at by just, Facebook posting or having great ratios. They did it because they were really involved in the community and people got really on board with what they were doing, and they marched forward with that. Fast forward to now, they might be seen as like a big corporate kind of nonprofit, but they all start out somewhere, and that name recognition, trust, and engagement with their donor base and the community is really vital. And I would, really say that having a good long look at who you're donating to from more of a relationship standpoint and understanding the nonprofit will probably serve you much better to make you feel better about where your money's going to than if you just ran ratios on a nonprofit. But something to keep in mind, you may really like a nonprofit and they have horrible ratios, and you might ask why that is, and see if there's some reason behind it, or if they're doing something to curb it. Especially if you have a relationship, you can have that kind of interaction and talk with, the executive director or the head of the development department or something like that, or volunteers, if they're being treated correctly, that kind of thing. So I think it's vital in taking another step and adding that human element, not just the nuts and bolts and black and white of ratios and financial statements. So Mark, do you have our next article for us?
Yeah, this one comes from our friends over at the Stanford Social Innovation Review. So you know what that means, everyone. If you've joined us in the past, buckle up, because this is a bit of a headier article. This is by Scott Smith and Lena Srivastava, I think, maybe. And this is called Web3 and the Trap for Good. So, we've talked in the past few months on cryptocurrency and other aspects of the web that are happening and coming forth with Web3 and the future of the web and internet giving, et cetera. So this article takes a deep dive in what Web3 is. And, they start off with this interesting anecdote from the World Wildlife Federation that they put out a clarion call saying they're going to sell NFTs, non-fungible tokens, to support efforts to protect 13 species that are endangered, et cetera, which is the mission of World Wildlife Federation. And they decide, we're going to get on this bandwagon and we're going to sell some NFTs. And oh boy, people are not happy about that. And the backlash was so fierce that they canceled this program within 48 hours. So if you're out there feeling like, I'm not ready for Web3 and I don't want to even think about cryptocurrency or NFTs or any of these other aspects right now, you're not alone. And this article kind of talks about why that is, and not only nuts and bolts reasons, but why kind of there's an intuition that something's not maybe quite right here. So Web3 is an umbrella term for this panoply of just decentralized models, protocols, technology. So this could be blockchain. Basically, this is supposed to be the democratization of the web, right? Where we take the power out of the hands of the few, and then spread it out and make everybody have the exact same power. So it's decentralized, and we all have these protocols, and there is no governments or banks or anybody. It's just the users, et cetera, et cetera. So the social sector, the nonprofit sector, is grappling with our existing technology tools and platforms and what these new efforts, what these new decentralized models are going to actually look like, and whether what they're doing, and we've discussed this again in previous podcasts, but what they're doing for good, in quotes, is really good for everybody involved, right? Are we jumping to a platform that has its own inherent and ethical problems? And, while we try to wrest the power away from the political elite who control the internet right now, are we putting it into the hands of a much better entity? Or are we just kind of switching from one center of power to another center of power? So how do we actually build a Web3 world where doing this thing for good isn't a separate effort, but is part of the foundational fabric of what that distributed Web3 looks like? So some of the challenges that this article mentions. Challenge 1, decentralized tech doesn't equal distributed power, right? Just because we've decentralized the tech doesn't mean that everybody has the same capacity and control, right? As soon as Web3 started coming about, there were big players that came in and said, okay, I want to control this. Like OpenSea is now a huge organization that controls the distribution of NFTs. So you basically have just shifted power from one source to another. So, this is based on our first article. This is one of the reasons Facebook has kind of switched over and turned to Meta, because they want to be ready for the metaverse, the new decentralized platforms that are coming. And as we discussed in Article 1, Facebook isn't necessarily the best arbiter of your knowledge or the arbiter of your technology. So challenge number 2, a significant percentage of existing power holders are already building their Web3 business models on exploitation and extraction. So, yeah, I mean, that's kind of self-explanatory, but, they're using, cryptocurrency and other pieces of Web3 are using a lot of energy, are using a lot of climate resources, are using a lot of wasteful and harmful power projects. Is this something your nonprofit wants to align to? They don't necessarily, they talk about the democratization of the web, but they don't talk about the cost to the environment, the cost to people, the cost to exploitation of labor, that happens as a result of this. So challenge number 3, building community trust takes more than decentralization, right? Trust is about getting to know people. It's not about, well, I trust this inherently because it's not held in the power of one specific person. That doesn't, just because it's not in the hands of one person doesn't mean that there isn't people you can't trust still at the top. Opportunistic tech creators, they say, never missing a chance to make the same mistake multiple times. They're building these tools to function the way their old technology have worked, but still thinking in the old mindset while moving forward and trying to create it in the new Web3. So, technologies that recreate power asymmetries of previous technologies, they're not systems with trust baked in. And again, I'll refer you to Facebook just because we talked about them earlier on, but them creating the metaverse and trying to bring these things virtually and creating this platform, I would ask how many of you out there trust Facebook to do this altruistically and to really get it right, because many would say they're not getting it right the first time around. So why with a new platform would they get it right? So I think I want to just kind of get to the meat of the matter. I've kind of laid out some of the problems, but here's the authors suggest that there are 4 basic tenets that we want to propose and move forward with a new decentralized web technology, that these 4 tenets are what the new Web3 should be built on: intentionality, accountability, mutually affirmed norms, and an ethics framework. So basically, this do good on behalf of these organizations should be baked into the new system. Right now, it's not. And that's why, I guess, going back to my thesis at the beginning, that's why when people start getting the icky feelings around NFTs or, the unknown cryptocurrency, and you hear that, people are using it to skirt laws, and there could be dark web stuff happening in cryptocurrency, and there definitely is. People don't feel confident, this is where I want to take my nonprofit, my baby, my socially responsible nonprofit that I've worked so hard to build up. If this Web3 doesn't have intentionality, accountability, affirmed norms, and an ethics framework, I'm just trading off one thing for another. So I think I've rambled long enough on this one, AJ, but it's a really good article, and we'll link to it in the YouTube, and of course post it on Twitter. So, I'm curious what you all think, what you all, AJ, think.
Yeah, both of me. But I think it is a really interesting article, and so to the author's point, though, I don't think you can stop so this has already started, right? I guess I'm more of a fan of cryptocurrency because I guess there's some kind of monetary value behind it, and maybe it's just my ignorance, but NFT to me just means no fucking thanks. But I mean, it's just, I don't know. I don't really understand the digital art asset version of it, and a lot of what I see in the NFT space looks like my 7-year-old grandson got into MS Paint and decided to make something. But I mean, if there was actually a really cool digital art piece, I think I might be more intrigued. And I have seen it. So I guess, buyer beware, because I think the real point that resonated with me in this article is that these new systems, Web 3.0, or these decentralized, whether it be cryptocurrency or the NFTs or any of this other blockchain kind of stuff, somebody that was there first is going to be able to make the most money. The same thing happened on the web, right? I mean, if you look back to Web 1.0, the people that were, you think of the Gary Vaynerchuk's of the world, he was first in, doing online sales of liquor or wine and beer. And he was able to sell that and make a lot of money, but he was first in and understood it from the ground up, and has continued to try and do so with the different iterations of the web 2.0 and now 3.0. But I think what we need to think about, and I think the tenets that they lay out as kind of the thesis of what they're thinking about is good. Intentionality, accountability, mutually affirmed norms, and the ethics framework that Mark talked about. I think that would be great if they could do that. But because of the decentralized nature and the first persons there are making so much money, that's a really hard ask for the whole Web.3 to undertake. What you can use those tenets for is how your nonprofit or how your organization interacts with Web 3.0. And I think, in the example of like the World Wildlife Fund, like taking a step back and understanding, hey, is this really good? If we're the World Wildlife Fund, do we want to promote a coin that, has a carbon footprint far outweighing what we're trying to do? It'd be the same thing as if they took their investment portfolio and put it into, a company that offers whaling in Japan or something like that, or, I don't know, somebody that eats shark fin soup or something, you know what I mean? That's damaging to the ecosystem and to endangered species. I think, you're doing the same thing by promoting something that is a pollutant. And although sounds new, cool, exciting, and sexy, in the world of crypto and Web 3.0, I think you really need to take a look at what the not just environmental factors, but the factors around what you're putting your money into or what you're trying to promote, and we've talked about that before on the podcast. But I do think that, like it or not, Web 3.0 is coming. And we've talked about in the past, you may not even know what crypto is, but heck, if somebody wants to donate it to you, you might need to have a platform to do so. And I think this article kind of revolves around tread lightly in this area, but it's an area where you're going to have to tread. I mean, it's coming regardless. I mean, NFTs are here, cryptocurrency is here, blockchain is here, Web 3.0 is here. And so how your organization navigates through that is really important. And I think this article gives you a lot of good, do's and don'ts. In fact, the whole second half of the whole bottom part of the article is really do's and don'ts. And I think it's worth reading through, and I think understanding, how this happens. And I think, they point out make some really good points. Don't impose this stuff, especially if you're trying to, if your organization is centered around, like, say, the homeless crisis or, the opiate crisis or something like that. You don't want to try and push, like your organization towards something like this when it's going to, like the people that you're serving aren't able to access this kind of stuff, or it puts you on a pedestal, a financial pedestal above where these people are, or they're going to see you in a different light. I think, not being one of these crypto bros or something like that. You don't want your organization to be seen like that, the same way that this World Wildlife Fund that Mark mentioned in the beginning was. And so, but I think you can leverage this and you can really get good return for what you're trying to do out of this if done correctly. And I think, if you're on the forefront of this, you'll be far and ahead of many organizations that aren't even thinking about this right now. So it may not be a strategy to jump on immediately, but being aware of it and understanding the ramifications and learning more is always a good thing, because I think more and more, things move fast these days. And 5 years from now, we may be talking about how crypto donations are the new, donor advised funds that are so in vogue now. This may be a major part of your contribution base, and understanding how to navigate it and understanding how it affects your nonprofit, I think is vital going forward.
Yeah, great points. And I think the do's and don'ts, I didn't really get too deep into those, but I think there are some really good tools within this article about ways to think about things. And, step back, ask questions, be curious. I'm all for technology and for innovation, but figure out how that's going to fit with your mission, your vision, and your values. I think I forgot to mention one of the favorite anecdotes they gave in this article that just, man, you just shake your head and wonder about people's cluelessness. And this was when they were trying to help the homeless at South by Southwest. So they paid them to make them roving hotspots so they could basically walk around and carry something, get paid for their time. And it was completely tone deaf, right? Because these people are out in the hot Austin sun as hotspots for everybody else. And it's like you're basically making the homeless Wi-Fi antennas. and the cluelessness, think about what you're doing, think about how you're engaging. And if you are going to choose to engage with cryptocurrency or NFTs, like everything else over time, these things will get ironed out. The energy consumption problem will probably be mitigated in some fashion. As we get deeper into this, we might find ways of doing cryptocurrency that are less energy intensive. We may find ways that make it secure. But as we've talked about in previous podcasts, 10 years from now, somebody could crack the blockchain code and then all bets are off. So just buyer beware, keep informed as you're participating in these things. And, if you have social media people in your department, in your organizations, or, somebody on your development team should be savvy enough to kind of vet these kinds of things for, the smell test, right? Because otherwise you're taking risks like the World Wildlife Federation does, and you don't want to come across as tone deaf, because that can turn donors off who were already regular giving donors, saying, what are they doing? I'm no longer giving to this organization. And nobody wants that. So on that note, AJ, I think you got our article for this week.
Poor World Wildlife Fund just got beat up on that. They're a great organization, by the way, just made a misstep on their NFTs. Anyway, our question of the week, though, this is about board financial report. So financial overview at a board meeting. And the person wrote in and wants to know what kind of financial information are boards looking for, wanting to know during their quarterly board meetings. And they essentially said reports are provided to the board members, but the board wants a quick presentation from the treasurer. What kind of commentary should the treasurer provide? And should the treasurer be the one presenting this, or should it be somebody else? And essentially asking what we think best practices are for financial information going to a board for a meeting. So I think, we've talked about this before in the past. I would refer the listener to our previous catalog of all things board reports, and financial reporting to a board. But I think it's a good part to kind of circle back and see if, we can provide some insight to this listener and find out if, maybe our thinking has changed. I don't think it has, but I can start and just say that information going to a board should be as simple and easy to read as possible. You don't want to inundate these people with 50-line profit and loss and every single balance sheet item you've ever had and zeros throughout this. You don't just want to print out a report from your accounting system and pass it off as a board report. You really want to take the time to curate that information and provide it in a way that's easily digestible by your board. And whether that's a dashboard of some kind, graphs, really pared down, overly simplified financial statements with big swaths of like cash and AR and not every single prepaid account you have. Being able to provide that to a board is essential so that people can digest that information easily, especially if they're not, they're probably not reading it before they come to a board meeting. So being able to have something short, concise, to the point, I think would be my number one tip on this. But Mark, I'm sure you have more, and I'll give you a chance here. I kind of stole the thunder with the first suggestion, but
it's all good. There are many suggestions we could go into. I think a fundamental suggestion I would say is know who your board is, right? Know the makeup of your board. Know if you've got financial people on that board who just really want to get to the numbers and want a more detailed outlook of those numbers. But know if your board is also filled with people who are there for the mission, but not necessarily there for the numbers, right? And so understand that you're speaking to multiple audiences, right? You might want to take, if you're large enough to have a finance committee, you might want to take the more detailed route and the more detailed numbers to the finance committee. And then when you bring it up to the actual full board or the executive committee or whatever that looks like for your organization, know who those people are and realize not everybody is going to want to see profit and losses and balance sheets and all the detailed information of everything and cash flows and there are specific things you need to present, but there are ways you can present them that are more digestible to people who don't have a numbers bent to them.
Yeah, and it's a great point. And I think, knowing your board, and then especially I think some kind of financial training or onboarding for board members is vital. I mean, if you can, when bringing in board members, train them on what they should be looking for, remind them during the meetings what they should be looking for, remind them why these are important to review and to understand, and what their role is in this whole financial picture. Because, from the bottom to the board in an organization, you're really talking about financial oversight here. And the board's position on this is the overall financial health and picture of the organization. So making them aware and of their responsibility in that role, and also providing them the tools to be able, and the understanding to be able to assess what's going on in a nonprofit, and the things to look for, and the things to advise them on what they should be, on the look for when being presented with a set of financials. And just the fact that most people don't understand how to read financial statements. And that's not an indictment upon people, oh my gosh, we're accountants, we know how to read financials. No, it's even when I started accounting, I didn't understand accounting. And so being able to explain what a balance sheet is, what a statement of cash flow is, what a profit and loss is, as accountants, we roll our eyes and think everybody should know that. But the simple fact of the matter is a lot of people don't. And so if you're not involved with your own business, or you haven't been exposed to accounting before, it can be very daunting to look at these statements and try to make sense of, I think people have a good idea of what cash is, or what an asset is, or a liability, just because of the English language. But I don't think it's, really clear as to what a balance sheet is to the average person, or what an income statement is representing. And especially in a nonprofit setting where you're really trying to get at the crux of using those donated and restricted and granted funds correctly, and being able to express to a board what's been done from a programmatic side and a program reach side, and the outcomes of everything in a financial way is important. And so whether it be your treasurer, or it's your CFO, or your controller, or the executive director, needs to be presented in plain English to the board so they can understand it. And you can walk them through and give them an idea of the financial health from what you see, and be able to present them with problems, challenges, and shortcomings when it is, and have an answer for those questions. Because I think, a board that asks good questions should receive good answers and not be brushed aside. So this is twofold. The board needs to be ready to understand what's being presented and have it presented in plain English. But the other side is that the person presenting needs to have enough understanding of what they're presenting to be able to answer questions. Even if that question is, well, that's a good question, I don't know what that swing is from, but tell you what, I'll find out. And I'll send you an email after the board meeting when we figure out, I'll get with the accountant and understand why this is the way it is. But I think, providing them with an open, safe space to ask questions and to have answers delivered to them that, are meaningful and they understand, I think is really important, just really important at a board level.
Yeah, I want to also add an executive summary, right? I'm a big fan of executive summaries. So this is something that people can digest before a board meeting. People might not actually look at a financial, like AJ was saying, and understand it. But if you present them with a narrative of some sort that, explains where you are in terms of your budget, right? What your variance numbers are. Like we brought in this much, but we expected to bring in this much. Why did we fall below our threshold? What our percentage of cash is, what our reserves are, what our current AR is, and if we have any liabilities that we need to be discussing. Some of those top line pieces, bullet points, or however a narrative paragraph, I'm a big fan, even more so, of bullet points, right? Because you really can get down to the crux of the matter, and people can look at it and go, oh, okay, I understand what we're going to be looking for here, as opposed to just seeing this blank slate of a financial and saying, what's important here, right? So granted, it's your interpretation of important. And like AJ was saying, people may come back with questions not related to the executive summary, or they might see a number that they want an explanation to that you don't necessarily know right offhand, but it's okay. You can come back to them with more detail, have that detail at the ready if you can for the meeting. But if not, they're gonna want you to drill down on some expense that's not in that report. You can go back and convey that to them later. So I think also with that, set up an expectation that this is a two-way communication, right? This is a work in progress, and this isn't just I have delivered, my 10 commandments, right? And that's what you get. No, it's an ongoing living product that can change, and even your summary can change as people interpret it different ways.
Yeah, I mean, that's a great one, Mark. And I think, and I think we mentioned this a little bit, but just to touch on it again, is presenting the information that's, knowing your board and understanding how to present that financial information in a way. Some people are visual people, so charts and graphs and all that stuff may resonate with them more and may be able to get your point across easier. A picture's worth 1,000 words. I would argue that a few good words, placed correctly that people can understand in plain English might explain it as well if somebody's an audible learner. But just staring at a piece of paper with numbers on it isn't going to do most people in a board meeting. If they don't have a financial background, very good. So having charts and graphs and somebody to explain it to them, I think, is vital. I'm probably beating a dead horse here and just saying, because it is so important. I see so many people that put together a board packet and they send it off and, hey, did anybody have any questions on financials? Good, let's move on. I think it's really important to provide that clarity and the underlying of what happened and presenting the financials to the board. And listen, this goes the same for your program staff. If you have budgets for your program staff or you're working on grants, it's vital for them to be able to see budget to actuals on their programs. Nothing's worse than being a program director or manager and coming in under budget and not having the report. So take the same kind of effort and care that you do with the board, with your staff who may not be, they're programmatic, but they need to understand the financials of the program that they're running and making available to them budget to actuals, whether that's on a monthly basis, quarterly basis, whatever makes sense for your team. But if you're not giving financial feedback to your staff too, that's running these programs, you're setting them up for failure. And there's only you to blame if you come under budget or over budget on a project because you weren't giving them the financial tools they needed to be able to manage their project. The same's true for the board. The board is there as an oversight. And if you're not giving them enough information or you're not presenting it correctly and allowing them to do their job, it's really on you if that part of the organization is failing or you're not getting the most value out of it. So it's really incumbent on us as accountants and the executive branch of a nonprofit to be able to disseminate this information, not just to the board, but to people that are involved with the programs too, I think is really important.
Yeah, and I think we could just wrap up this segment with one more that I think is important. Edit, right? Know what to give and what not to give. You don't need to do a data dump on your board. You don't need to give them reams of paper to say, here, sift through this and figure out what's going on. Even if you include an executive summary and there's 10 pages of backup, you will have board members who feel obligated to read every page and look at everything. And that's not what a board meetings are there for oversight and for consent. And, they're not there to go into the deep weeds. People can certainly ask questions and you can certainly go more into detail, but learn how to edit, learn what to leave out and get the pulse. Going back to point number one, get back to the pulse of what your board is looking for and then learn to edit appropriately. This doesn't mean you're trying to hide anything. This just means you're trying to make the best use of the time that you have together. There's always room to ask more questions later, but just like with this podcast, sometimes we need to learn to edit. And with that, I want to thank everybody for joining us again for another episode of Profitless on Purpose. We've really enjoyed having you here. As always, you can join us on the web, watching our YouTube videos. Feel free to comment or comment on Twitter at ProfitlessPod. We appreciate the engagement. We always welcome questions for our end of podcast segments. And on behalf of AJ Wheeler and myself, thanks so much. We'll see you next time.
Thanks, everybody.